Listen, the reality is in today's dental marketplace, there's usually one of two options: stay being a practice owner or sell to a DSO, usually backed by private equity. And oftentimes, those folks that think, oh, I'm just going to do maybe 3 to 10 to 15 practices and stay as the owner doctor. I don't plan to sell to private equity, eventually get to a point in their careers where they end up selling to private equity because of various reasons. Well, today's guest, Mike Baird, has an option number 3, which you are definitely going to want to listen to everything that Mike shares about in his business, Accelerate Dental, because he is what I 100% believe is a dental disruptor. And he's someone that was once the CEO of Henry Schein 1, has a really big MBA and accounting background, and knows the number side and knows that dentists are honestly getting duped and pretty much raked over the coals when they join most DSOs. So why not create an alternative? And what I also really love about Mike is he is saying, please steal this model and let's do more of it, because we need to save the industry. Doctors' pay are down, depression is up. The industry is really at a critical moment in which it could go one way or another. And Mike is trying to do his part in transforming what could inevitably be the future of dentistry if something doesn't change. Please welcome Mike Baird. Mike, I'm so glad that you're on the Real Talk of Dental. I got to meet you, I think definitely late last year, the middle of last year at the Collective, which you and I both belong to, that we've
Yep.
hung out a couple times in Salt Lake City, Utah. And I definitely admired you from afar because whenever you're in the room, you have a very pensive, deep thought on your face. And there's like passion just emanating from you, but you're also very much like in deep thought and you're perplexed by a lot of the things. And you have this incredible passion right now and this conviction. And anytime I see that in people, I'm always like drawn to it because I'm like, what's going on inside that mind? Like you have this really, really intense energy, but this very like loving and compassionate and pure heart matched with this like conviction and righteousness in a really good way. It's like almost like an advocacy part to you, which I really admire. I've been wanting to have you on because I want to share more of you with people because I really want more people to know what you're up to and what your latest work is. So please share with everybody, what the heck are you up to? And where's all this passion come from?
I love that, Brandy. It's so great. Pensive. I've not been described
Mhm.
as pensive often. I think some of that, by the way, is because I feel like I'm an outsider in the dental industry, and people stay in dental for a long time. Like you come to dental and you stay in dental, and so I feel like everyone's an expert and I'm not, and yet here I am trying to change things. What am I up to? So I'm the CEO of Accelerate Dental. We're kind of an alternative group practice model, trying to get as big as we can get with, we have 65 doctors today and 40 practices, and it's owned by the dentists, and we're trying really hard to counteract a lot of the move to DSOs and things. And I'm just really passionate about helping dentists achieve their dreams and goals. And I feel like a lot of dentists today in our current environment kind of wish they weren't dentists anymore, and they kind of wish they could go back and be accountants or something. And I feel like dentistry is an amazing profession, and if done right can bring a fantastic living, to these doctors. And I feel like they can have all their hopes and dreams. And so like part of this is just like helping a group of people be successful. And so yeah, that's what I'm up to now. That's kind of my life's work right now.
And you're a bit of a disruptor, right? Because there's sort of two primary models that exist in dentistry right now, which is solo practice owner or, this DSO model. And a lot of folks actually start out saying that, oh, maybe they want to get to like 7, 8, 9, 10 hour offices. They'll stay, doctor owner. They don't plan on selling. I hear this all the time. They don't plan on selling to private equity. And then they get into it for a few years and they're like, well, maybe I will. And, they start seeing some of the options and they usually end up going that way. But talk to me a little bit more about these alternative models that,
Yeah.
because You have some strong thoughts on this. Yeah.
I do, and part of this is a little bit to be a truth teller. I think what's interesting about being a dentist is like you didn't go to business school, you didn't work at a private equity firm, you didn't, you've seen one deal in your lifetime when another DSO might, offer something to you, and you don't really have the perspective, right? And so I feel like that's where I do bring, background. I have an MBA, I've worked at multiple private equity backed businesses, I've taken a startup all the way to an IPO. And so I have a business background. And so when I interact with dentists and they're like, well, this is how it works, right? And it's like, well, hold on, let me help educate you on the world that you're in. And I'm passionate about that. And maybe a little bit of the why. We've got an alternative model. Part of that is maybe an inherent desire to find hybrid options. So it's like if there's vanilla and chocolate, I'm like, well, is there something in the middle? Is there some other variant that we can come up with? And so when we decided to start Accelerate Dental 3 years ago, we started off by interviewing, like we spent an entire year before we launched, and we interviewed like 100 dentists, and we asked them all, like, what are you trying to accomplish, and what's working and what's not working? What do you like about being solo or not like being solo? What do you think a DSO will get you, etc. And we literally sat around a whiteboard for a year, like writing math formulas, and at the end of it, we said, I think we have a way to do something different and try to capture the benefits of all things. And the why of that, by the way, is, look, if you are a dentist in a smaller practice, I think the average dental practice in the United States is doing around $800,000 in collections. To be honest, that's not a practice that a DSO is going to want to merge with. So if you kind of drew your bell curve, you'd say probably, 50+% of practices aren't really the targets for DSOs. And look, we're happy to work with those. We partner with practices like that all the time. And obviously, there's a sweet spot where DSOs tend to find practices. They tend to be 1.5 to 2.5-ish million dollars, and they want to grow them, et cetera. But then we also meet, whether it's small group practices that, have 5 or 6 practices like you mentioned, or that, they've kind of gotten to like 7 million, 10 million, whatever in their collective production. And they think they only have one option. And I think that's the one, because you're not going to go find a solo dentist who's going to come and buy a 6 practice group. And I think in some ways that's the area we're most excited about, because we say, well, wait a second, like there are options. You just because no one else has created an alternative in the marketplace doesn't mean that there aren't alternatives. And so it's a little bit of that. And then I think part of this is when you're not a native to an industry, you bring your experiences into that industry. And so for me, I have an accounting undergrad, so I have some accounting, background. I worked at a consulting company, McKinsey and Company, for a number of years. I've done healthcare startups. You bring that in with you. And so for me, I looked at other industries like public accounting, or like law firms, or like big consulting firms like McKinsey. And they have a different model where, generally speaking, they're owned by partners. They're owned by partners, and they have been for 100 years. And these partners get fantastic returns by being in a group, because they get the benefits of a group. They get, better accounting and HR and whatever, because they can pull their money to get those services. But they're not owned by outside investors, like private equity firms, et cetera. They're not publicly traded, and they have these wonderful careers. And so I would look at models like that and say, why are we doing something like that in dentistry? And also, because I was in healthcare before I came to dentistry, I always joke like I come from the future, right? So in healthcare, starting 30 years ago, these private equity firms and started building these MSOs. So before DSOs, they're MSOs. And so 80% of doctors today in the medical space are part of a corporate-owned group. And we've seen what that's done to healthcare. Your doctor gets 3 minutes to spend with you. There's not a lot of, deep insight. And so when I came into dentistry and saw, wait a second, we're at the 25% or so of doctors have kind of affiliated with a DSO of some sort. And by all accounts, that's running up very quickly to someday being that 80% mark. I said, well, wait a second, is this what we actually want to happen as an industry? And so as an outsider, I'm coming in saying, I think there's better ways, and let's just have a conversation about your options. And that doesn't mean someone shouldn't say solo. If that's the right answer for them, stay solo. That doesn't mean people shouldn't necessarily join a DSO. But I think having an honest conversation about the pros and cons of it, as opposed to thinking that there's just only one way to go, that's part of what drives what we're doing.
Yeah, and how did we get here? I would love a little history lesson from you based on your background, because I know you were the CEO of Henry Schein One as well, and you have, like you said, a lot of private equity and accounting background, so you can really see sort of how this transpired. And to be honest, and you can correct me if I'm wrong, but I originally moved to Michigan, I believe 10 years ago, maybe a little bit, maybe 11 years ago. But I had come here to help lead a group, an emerging group, doctor owned. And it was at that time, they had 17 offices throughout the US, and I was helping them run it. I became president of that group. But when they started getting courted by some private equity, and I remember we all were kind of looking around like, oh, wow, okay, this is possible. And it wasn't really that long ago, but then all of a sudden it seemed like overnight, it just, and so, I mean, over the last decade, which doesn't seem that long ago. I mean, I feel like I just landed in Michigan, but it was like 10 years ago. So is that around the time when things just took a quantum leap, and then everyone just started riding that private equity train? And
Not to get too nerdy here, but there are some macro
yeah,
factors here. All
yeah,
goes
for
back
sure.
to some of the financial crashes that have happened that then instituted really intense financial regulatory rules in the United States of America that then led to a shift in money. So less money is in public markets and more money has migrated to private markets. So you can look at macro factors like, and this will be ballpark, there used to be 10,000 publicly traded companies, and today there's actually only about 6,000 publicly traded companies. And so what's happened is the flow of wealth has actually started to amass itself in private equity firms. And so these private equity firms are literally sitting on trillions of dollars that they need to invest in something. So they go start hunting for deals to invest in. And so if you were to go back, a decade or 2 decades ago, you would see that they had a lot less in their bank accounts and, more was in the public markets, et cetera. So as a big supply and demand arena, that's what's going on. We feel this in dental, but it's the same thing that's happening if you were at an HVAC company, or if you were at a car wash company, or if you ran a veterinarian shop, or if you ran a
Yeah.
barber shop, or if you ran, any number of businesses. There are hundreds of private equity firms hunting for businesses that they can acquire and do something with. And so you look to successful models. So I always like to go back when I was a consultant. Walmart was one of my clients once upon a time. So let's look at the Walmart story, right? Once upon a time, every town had their local hardware shop and their mom pop, whatever shop. And then Sam Walton came along and said, well, wait a second, if we combine the hardware shop and the retail shop and let's put the grocery store together, and suddenly we have, these Walmarts, and it changed. There are pros and cons to that, right? You can operate more efficiently. There's lots of profit. I mean, Walmart's one of the biggest companies in the entire world. But that has an impact that it's more efficient to run that way than it is to be a small mom and pop shop. And so unless you live in a really small rural town, most likely you're doing your shopping at a Target or a Walmart now and not one of those shops. Well, that business model is now coming to increasingly niche industries, and dentistry is one of them. And so we feel this as if it's just happened to us, but it's actually a trend that's been happening across all industries. And part of what's made it interesting, and why dental has been so attractive is that, look, this is like if you talk to a banker about businesses that they want to give loans to, dentistry is always at like the top of the list. It's one of the least likely to go bankrupt kind of businesses. And so, banks want to be in that space. Well, then so do investors. It's a business that, if run well, creates great cash flow and opportunity. So why wouldn't you, as an investor, want to be in something that has great, stable cash flow? And so all those things come together. And I think if I were to put a gas pedal to it, so that probably started, like you said, kind of in, let's call it 2013, 2015, it started ramping up. This is when you saw like 3 or 4% of dentists are part of it. But what really took it off was when COVID happened. And so when COVID happened, you go for basically 3 months where almost every dentist in the country could not practice. Well, you and I run our own businesses, and you realize, man, if I had to go without a cash flow for 3 months, things get scary really quick. And while that probably just was a big heartache and hurt a lot of, smaller solo practices, the bigger ones were like, I don't like this. I'd like to have other options. And so that seemed to accelerate a lot of DSOs entering the space in conjunction with COVID, massive decline in interest rates to try to, stir economic recovery. oddly, we were very focused on healthcare. So healthcare returns and multiples were at the highest point ever in kind of 2001, 2002. All that kind of converged together that suddenly DSOs took off. I mean, just really took off. And by all estimates, we're about, like I said, 20 to 30%, depending on how you measure it, of doctors are now affiliated with the DSO. And so, not to nerd out and go back to the big macro level, but it's a lot of factors that are all coming together at once that are quickly transforming the industry because we changed the rules, right? At one point, it's like, hey, if you're in a big city, every 3 blocks there's a dental practice. If you're in a rural area, every 5,000 people there's a dental practice, right? These are the rules of the game. And oh yeah, there's a dentist that's like 3 miles away, and then there's another dentist 3 miles away, and whatever. We all just kind of do our thing. That's not the world we live in anymore, right? Now we're in a world where it's like solo, 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 Aspen, which is very different than a solo practice. Solo practice does not advertise on. I was watching CNN last night and some World Cup stuff, and an Aspen ad comes on. Well, that's not what a solo practice does. They don't advertise during the World Cup. But with these larger, dental groups, they can. So the industry is changing very quickly. And if you're a solo dentist, your world's going to be very different. And suddenly, your suppliers are different because they're thinking about, well, it's not just a bunch of solo practices. Well, I saw this running Henry Schein One. I have two very distinctly different customers. One runs a $1 million small box shop, and the other is, oh, you're doing $5 billion a year. Those are not the same things, right? And so you might have very different pricing strategies and, negotiating strategies and sales strategies and all those things. And so the market is kind of bifurcated in a big way. And so these are the things that are starting to drive big changes in dentistry.
Yeah, it's interesting you say that too, because I've been around the dental space for about 20 years, and a lot of the people that sold during those times are some of the people that are telling their colleagues like, oh, you should sell, it's a great idea. But the people that are selling now aren't getting the same benefits as the people that sold during like 2021. And it's just a different market, as I'm sure you know way more about that than I do. Hey, I just want to pop in on today's episode and talk to you about this new GPT I wrote called Boundary Boss GPT. And it's for those moments where you've said yes to something and immediately felt that pit in your stomach, or maybe you've now written 5 drafts of an email because you're trying not to sound mean, even though you're exhausted and you swear you've said this thing so many times to the same person, or you're kind of sick and tired of staying late, taking it on, smoothing things over, and wonder why you're the one that's always burning out. A lot of the conversations that I have on this podcast, we often hear about people hitting these walls of burnout and oftentimes not even knowing what to say. So that's why I built Boundary Boss GPT. It's kind of like having me in your pocket when you're about to respond to a text, email, or team issue, and you just don't know what to say because your people-pleasing brain is completely hijacking you. This is going to help you have clarity, confidence, and self-respect without the guilt, over-explaining, or the drama. Go ahead and grab it in the show notes below. It's totally free, and you're going to love it. Okay, now back to this awesome conversation. Tell me from your perspective now why seeking alternative ideas and selling to private equity is better. I guess what's the downside at this point?
Yeah, great question. I feel like so anytime there's a new investment thesis, it's called the first mover advantage, there are returns to be made. So imagine you were the very first private equity company to have the idea to put together 10 dental practices and start to cut costs and do something. Well, you're going to do really great because no one else had thought of this before. It's very different when you are like the 500th private equity firm to try to do this. And by the way, if you start off with, if every single practice is a solo practice, well, if you're the first person to do this, you're going to go after the very best practices, to go do that. Well, now that we're kind of 20 plus years of private equity firms trying to do this, they've already snapped up a lot of the great practices, if that makes sense, right? And so there's less and less and less targets to go after. So that's one of the things that changes is, at the beginning of a new investment trend, the early investors are going to do better. You and I, Brandi, just watched this first $1 trillion company, SpaceX, traded this week. It sounds very exciting. We should all go invest in SpaceX. Well, guess what? It was way better to invest in SpaceX, back in, 2015 as an early investor than it is today. I'm not saying that it can't be great, but those people that invested, because guess that it was new back then. No one else was doing space, not that a lot of people are now. But it's the same thing in those environments. And so what then happens is anytime you're in investment theory, you hear from your friend like, oh my gosh, I did this. I had this amazing stock. I sold this thing. They're always going to tell you the very best stories. And there were many of those stories in the early days. But then we tend to anchor on that and think, well, so they must all be great, right? And what's happened over the last, 20 years is those stories have changed. And they've actually changed pretty dramatically. And dentists either don't want to believe that because they don't like the data points that are suggested, or they're just not aware of it. And it gets reinforced by the other players in the space. So let me give you an example. In 2022 was probably the peak of all this, just post COVID. Multiples on dental practices hit, kind of an average of about 14 times your revenue. That's a huge number. In 2014, I think we had around 25 different DSOs that were rebought. It's called the recapitalization, but they were rebought. And so very frothy. People are quite excited. Well, let me tell you about 2025. There were 5 DSOs that recapped. And by the way, 2024 was also 5 that recapped, so much lower numbers. The average multiple was closer to a 10. Again, that's a big drop. That's almost 33% lower than it was just, 4 years prior. And interestingly, while 10 DSOs recapped in 2024 and 2025, 75 others tried to and were not able to. Now, that was not the case in 2022. Anyone that wanted to could, and you didn't even have to be that good because everyone wanted to do this. So that's very different data. If I told you in 2022, you've got, a 90% chance of getting recapped if you're in a DSO, which is good. That's how you sell and make your money. And it's probably going to be at a 14. Well, sign me up. That sounds great. But if I said to you today, well, by the way, the numbers come way down, it's 10x, and that's for the group, not for our practice, right? It's 10x. And by the way, your probability isn't last year, the 5 that recapped. It's not even 5 over the 75 that didn't recap. It's also, oh, what about the 25 that went out of business or went bankrupt because they had loans from 2022 that were really cheap at the time and interest rates have gone up and so they went into bankruptcy. And so now you're thinking your odds of a recap in 2025 are like 5%. This is a very different scenario than what was happening just 4 years ago. But if you were to ask a broker, I'll give you an analogy because I know you like analogies. If you ask your real estate agent, is now a good time to sell my house? It's always a good time to sell your house. Always. There will always be, oh, because there's not a lot of supply in the market. Great time to sell. Or, oh, lots of people want to move right now. Great time to sell. Because that's what their industry is. And so the people that share the data on this are typically brokers and DSOs. DSOs need more practices in their portfolio so they can grow. Brokers, this is the only way they make money if they sell. And so if you ask them, and these are the people that are predominantly providing the information in the space, it's always a good time to sell, right? But I don't think that reflects what's actually happening in the marketplace. And so early people may have had some really fantastic success, but it was different. Multiples were higher, success rates were significantly higher, and there weren't really other alternatives. And so I think looking at all those things, both one, motivated us to try to come up with a different option, and two, I think we've learned things about what this means for the industry. And so I think a lot of dentists want to focus on one thing, which is money. And they think that this is the way to make the most amount of money. But there are many other factors, lifestyle, what happens to my patients, what happens to my staff and my associates, et cetera, that are other factors that matter. And not only are there pros and cons in each one of those categories, but let's just talk about the money. The money is not the same as what it used to be. Both, it's going to be a much different number, and the probability of that number is substantially lower. And so I think that's where, unfortunately, in an industry where there's asymmetric information, if I'm talking to a broker or to a DSO, they have a broad view of everything that's happening in dental. They know what other practices are trading for. They know how often they recap. If you're a dentist, this is not what you do for a living. You have very little information on it, and you're just listening to, well, I heard this podcast where some broker got on and said that everyone's getting a 14x. You take that as fact. And so part of what I feel my job is to actually share the data with folks and say, look, you just need to know what's actually happening in this space. And that DSO deal that you think is your best outcome may very well be dramatically worse than staying, by yourself and going it alone, and or they may not be telling you about other deals, because you got to think back to, well, what drives everybody, and what incentives do they have? And I think our broker community, even though they do good things, it's not that they don't. You're going to get a higher value if you have three people look at your house than if you have one, right? But they definitely have their own biases and things that drive them. So I think that changes it as well.
Yeah, and they have that lens, right? I mean, that's their this trained eye of always looking through that particular lens. So tell me about this alternative model.
Okay.
What's the upside?
Thanks for that nice lead in,
Yeah.
Brandi. So, and to be honest, like, this is a model that I hope others copy. So we think we're
Yeah.
one of the few groups in the country that are doing this, but I would love it if there were 20 or 30, just because I think it's good for the industry. So Accelerate Dental has been around for 3 years. We currently have 40 practices, about 65 doctors, and we've built our model around three principles. The first is that when we partner with a practice, we will always be a minority partner in the practice. What does that mean? We're going to be under 50% ownership. 99.9% of DSOs are going to be over 51% ownership. And why is that? It's because when push comes to shove, they want to make sure that they have control. They can fire you from your own practice, if needs be. They can dictate what the decisions are. That doesn't mean they always take that ability, but they definitely want to have that ability. We believe that, look, doctors are going to do what doctors are going to do. And frankly, we want doctors to do what they think is best. And so I just don't believe in what's called hard power, where, hey, if it comes down to it, by law, I've got more shares, so I get to be in charge. Our belief is, we're not here to tell you what to do. We're here to be a partner and a consultant and a mentor and to share data. But at the end of the day, we think a dentist is best positioned to do what's best for their patients. And so we choose to be a minority partner in the practice. And so on average, we end up being kind of a 25, 30%-ish partner in most practices. And we like that. And we think dentists like that, because it means that they really get to have the autonomy to run the practice they want to have. Everyone says autonomy. I always call it autonomy with an asterisk. It's autonomy until the other partner disagrees. And then, just to be clear, you do not have autonomy, because they have the choice over what happens. And we do not have that capability. Number two is, look, there's nothing wrong with private equity. It's been a big part of my life and my businesses and how I've raised money. But I think there's an inherent mismatch between private equity and medicine. If you look at the data, private equity owned hospitals have higher death rates and, lower satisfaction scores. It's just that's just the numbers, right? Because they will optimize for profit. They're very good at getting returns for their investors. That's a different stakeholder than optimizing for a patient. I think a dentist has a different view. Yes, they want to make money, but they also are physicians. They care about the Hippocratic Oath. They care about providing great, quality care for their patients. And so they will have a different balancing metric by their very nature than a private equity firm is. And so principle number two for us is, we did not want to be owned by private equity. We wanted to be owned by doctors. And so our doctors own our group. They help drive the long-term strategy, and we will make inherent trade-offs that probably are slightly biased against profit and definitely more biased towards overall patient care. And we think that's a great thing. The third difference is where we see this going long run. The objective of a DSO is always to sell, because that's how they make their money. So I want to buy up as many practices as I can, and then I want to sell to somebody else who is going to buy as many practices as they can, and then they're going to want to sell to somebody else. So that is an inherently short-term view of the world. It's like, if your goal was to be married for as short as possible and then get remarried again, and then be as short as possible and get remarried again, it's just a different focus, right? Our view is what we call the perpetual model, and that's that we will not sell the company. In fact, we actually wrote into our operating agreement that we're not allowed to sell the company, that it's meant to be a long-term entity. So when we look at a practice, we say, well, if we're going to own this practice for the next 50 years, we're going to make different choices and investments in that practice. And number one. And number two, when we're selling a doctor's stake to another doctor. And that's really important. We're not selling it to a company, because at that point, you're like, all I care about is money. I actually don't care about my name or the culture or my assistants or my associates or what happens to the practice. I have to care what's going to happen if I'm selling to another doctor. I want them to continue on my clinical legacy. I want them to take care of my patients, et cetera. And so that is a big part for us. Is it's not that eventually a doctor's got to sell their practice. This is probably the biggest asset that they have. But we think you can get as great of an outcome selling to another doctor instead of, selling to a corporation. And so those are the three things that we are structured around, and it's proven to be highly attractive to doctors. And interestingly, when you start to look at the real numbers behind that, you can do just as good as you can in another practice. You and I talked at the beginning about you have friends with 5 practices, they don't know what to do. I don't think I'm going to sell to a DSO. And then eventually they get to that point where they look around and say, darn it, I'm not going to find one doctor who's going to come in and buy all this from me. And so they think their only option is DSO. Well, in our world, we'll partner with them and say, great, let's start developing your associate pipeline and getting the right associates in. And then let's sell 10% of this associate. And let's sell 10% of that associate and 10% of this. And eventually you are going to sell the whole thing off, but you sold it to other dentists as opposed to a private equity firm.
Yeah, I freaking love that. So who is your ideal fit for this model?
Yeah, it's pretty broad who we will talk to, but there's different outcomes, right? So we only will partner with a practice if we think we can grow them and help them be successful. And so that is a little tricky. If you're running a $500,000 3-op practice, I can be really honest, there's not a lot I can do to grow that practice and help you be successful. That said, I'll still talk to you, but the objective will be different. How can I find another practice down the street and put you two together and get you into an 8-op practice so that we can start to grow it? So I'm happy to talk to those, but most of the folks that we talk to tend to be in the $1 to $3 million range. They've been practicing typically for 20 years, and they're like, I've done everything that I can, and I've kind of hit a ceiling, and I don't know where to go. That tends to be the normal dentist that's attracted to what we're doing. We also love to talk to dentists that are doing 2, 3, 4, 5, 10 practices, because we now give them an alternative. And I think, not to get overly into the numbers, but what pivots for them is a private equity exit is typically around a one-time event, right? I'm going to get this big paycheck in theory. It doesn't actually work out that way. You typically get about half of the value, and then the rest of it you have to earn over time. And then some of that you hope that the stock is worth something. Where we say, actually, we can help you carve that out over time and preserve your ownership of that profit for a lot longer. And it's that profit where most dentists actually make their money. It's not the value they get for the practice. And so if you are a dentist that has more than 5 years to practice, then we definitely want to talk to you, because typically what's going to happen to you when you sell to DSO is you're going to get, let's just say, 5 times, your earnings. And that means for any year over 5 that you work, you're actually making a whole lot less money because you no longer get that profit. You sold it off to somebody else. And so we like to maintain that profit for as long as possible. And so frankly, we just think it's doctors that want to optimize their outcomes financially, but also have other things they care about. What are your personal goals and aspirations? What hobbies do you want to figure out? What kind of doctor do you want to sell to? What kind of practice do you want to run? What do you want your legacy to be? And that is incredibly important to us. And our doctors appreciate that, because we're trying to hit on more than one value metric. It's not just about the money. We want to maximize your money, but we also want to maximize your dreams, hopes, and aspirations of you and your spouse and your family, etc.
Yeah, you're speaking my language for sure. And thank you so much for diving all into this. And I guess I wanted to just get some clarity too for you and your story, because you jumped into this later in life, like launching this new business. You have a family, this is a high risk thing that you did, and you easily could have stayed comfortable, I imagine, in whatever trajectory you were currently on. You're, in my opinion, a disruptor, right? Which is always, it takes a whole lot of grit, and you got to show up every day and keep up the fight. And I guess I'm on my New York Knicks kick, right? Because they just won. And, you're kind of the Jalen Brunson of, dental. I'll use that relation. But it's like you're putting in the reps every day, and you're doing what you need to do. And you have your eye on like where you ultimately want to go, but you also know that you need to show up every day and put in the work and keep banging the drum, right? Keep speaking your truth. What's that driver for you? Like, what made you go, I need to frickin' do something about this, instead of just being like, it's the way of the buffalo, it's where it's going. I'm not, this train is full speed ahead. There's no slowing it down. What was that moment for you, and what keeps you getting up every day?
It's a very personal question, and I'm glad you asked it. So I've been fortunate. As I said, I was an entrepreneur. I started a healthcare company, was able to sell that company and then stay on at the company that acquired us and have another sale when we actually took it public, and actually made really good money out of that. I've benefited from being an entrepreneur. I've also benefited from working at very large companies like Schein, where I got to make a fantastic income. But at the end of the day, I turned 50 this year. which is a milestone for some reason. You start thinking, okay, the career in front of me is probably shorter than the career behind me, and you start thinking a lot about impact and legacy and what you want to do. And so I'm much more motivated by impact. I want to make money like everybody else, but this ended up being an arena where I felt like it wasn't too late to change it. And so my first career was in medicine. I started a telemedicine company, in 2010. Like, this is long before COVID came and we all started using Zoom for our doctor consults. At the time, we thought, hey, this is going to be really important. And it was really an amazing career. We worked on, pediatric telemedicine and neurology telemedicine, like saving stroke patients' lives. And it was incredibly rewarding. And so when I came to dentistry and saw that this change was happening, I felt the same passion about this is an industry that I think is going to change in a negative way. So I always describe my doctor. I love my doctor, fantastic guy. He's part of a very, very large medical group that will not be named. And every time I sit with him, I know I get 3 minutes and he's got to run to the next appointment because that's what medicine looks like today. And on the flip side, when I think about good dentistry that I've experienced, it's dentists that actually can choose to take the time when they need to help find the right solution to me. And I like that form of dentistry. And I don't want my dentist visit to start looking like my doctor visit. I want it to stay different. And then when you combine that with having now met and I know so many dentists, and these are people that have chosen to invest their time and skills in a career. And once you've gone down that investment, it's not easy to change. Like, you don't just you hit 40 and say, never mind, I'm going to go be, a handyman now, or I'm going to be an accountant or something, right? They're invested in it and watching the statistics. If you look at the ADA publishes a lot of statistics on the industry, income for dentists is down 22% over the last 15 years. That's not a great trend. And yet we need
And
dentists. I believe in
depression is up, you
that's
know?
right. Depression is way
Yeah.
up. They're more overworked than ever. There's all kinds of statistics I could share with you here. But we need good quality dentists. I believe in the connection between oral care and overall health. And so it was sort of like, this is an industry where it's not too late to make a change. And that's kind of what drives me, right? Like, I'm not a dentist. That doesn't really change my outcome. I could go work at a software company somewhere else if I wanted to. But I felt like this was an arena where there was positive change to be made. And so what's been fun now, having worked with 65 dentists and having had multiple dentists that have now, come into our model, had great outcomes and exited as they retired, et cetera, it's been amazing to watch the impact that this has made on their lives. Like, when we started, the first thing after our year of sketching out formulas and trying to figure out this would work, the first thing we did is we found another group that we merged with. And so we had dentists that had been around in this group for 8 years and then, got to continue on. So I always say, hey, we're a 3-year-old company that's got 10 years of history. And so what's been fun is we can now look at the outcome of these doctors and how what we do with them changes their outcomes. What's been great is we now have data on that. And so on average, after 5 years of working with this dentist, three things happen. Number one, on average, we double their collections. So if you were a $1 million practice, you become a $2 million practice. On average, we 2.5x their equity value. So, you had $1 million worth of equity value, you now have $2.5 million of equity value, or whatever the number is. And on average, we take their personal income, their annual income up 50%. So if you're making, 300K, you now make 450K. And we're really proud of those numbers. And so the dentists that we work with are like, this is amazing. Like, my life is better. I'm still an owner of my practice. I'm still getting profit. I get to choose who's going to be the long-term owner of my practice. And so it's not that I don't believe in the models that, DSOs use. Like, we definitely want to optimize your marketing and optimize your procurement spend and figure out ways to do better operations in your practice and schedule patients better. We want to do all those things, but we do it with the goal of benefiting the dentist. And so what my biggest hope is that those dentists tell their kids, this is a fantastic profession. You should go be a dentist. I've got a great lifestyle. I make a fair income for, all the education that I had to go get. And by the way, I get to help patients, which is one of the things I love about being in healthcare. And so that's a long-winded way to come back to, like, what drives me. And it's that, like, what could be more fun than improving our healthcare system and improving the lives of the people that you work with and seeing that tangible impact. That drives me. That gets me really excited. And so even though it's a hard industry and we're kind of taking a different tack, and it's hard to find dentists, and I'm not going to say that it's not a demanding, doctors by their very nature tend to be a very demanding, clientele, but we feel like the outcomes are there, and that gets us really excited.
Mike, thank you so much. I'm so glad that you exist, and I'm so glad
Me
that
too.
you took this you took this path and that you decided that you wanted to make a big impact in your life. Because as soon as I started hearing that you were offering alternatives and the passion that comes with it, I was like, hell yes. And we definitely need more of you. And I like that you're even saying, hey, if you like this idea, steal it, do it. I'm sure you're open resource or book for people that want to sort of
Absolutely.
adopt this model elsewhere. That was something I've always, people either love or hate Elon, whatever, but something I've always really appreciated about Elon was that he said, take the technology, use it, for the electric car. And I always thought that was really cool. And you got some of that in you too. So thank you so much for being on. This was super fun. I might have to have you on for round 2 because I want to hear more about the sailing stuff. But I have a feeling that's like a whole other podcast. For those of you
Anytime.
that don't know,
Yeah.
he's an avid sailor, which we don't get too many of those on here. So, but thank you so much. You're awesome. This was a lot of fun. I appreciate you.
Yeah, thank you, Brandi. My pleasure. Really great to chat. And we're always here if we could be helpful. I'm easy to find. It's Mike at acceleratedental.com. You can find our website, and happy to share ideas or thoughts or insights with dentists anywhere. We just really believe in improving the profession, improving the industry in any way that we can.
You just listened to the Real Talk of Dental. If it hit, if it stung, if it made you feel just a little more human, good. That's the point. This isn't about fixing practices, it's about healing people. And if you're brave enough to show up real in this industry, you're my kind of leader. Subscribe, call in, send your wildest workplace confession. And most importantly, don't clean up for anyone. The mess, that's where the magic lives. We'll see you again on the next episode.